Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, February 18, 2009. Australian retail sales grew 0.8% in seasonally adjusted terms in the December quarter. This was lower than expectations, but still an improvement compared to the pace seen in the third quarter. The increase came as a result of a 10.4 billion Australian dollar government package in which part of the plan was rebate checks, though households chose to save their handouts or pay down debt rather than spend, which may have accounted for the smaller than expected result. In a second release, the leading index for Australia fell 0.4% in December, following an upwardly revised 0.6% drop in November. The main negative contributors were falling building approvals, stock prices, overtime worked, productivity, and corporate profits. The Aussie-US dollar pair fell rather steeply yesterday, setting a low at 0.6330. Today, the pair bounced up off that low in overnight trading before declining in the European session. The pair came close to retesting that support and was setting up in ranging conditions during the rest of the day. In the UK, the minutes from the Bank of England showed members voted 8-1 to cut rates to 1%, with David Blanchflower arguing for a deeper reduction to bring rates to as low as possible without delay. With interest rates at historic lows, lowering rates is losing its effectiveness at influencing the UK economy. Therefore, the MPC laid out how they will use unconventional methods, including using the asset purchase facility to purchase government and other securities financed by the creation of central bank money. A measure of UK manufacturing fell to its weakest level in 17 years in February. A balance of 56% of respondents to the CBI survey said that total order book levels were below normal, up from the net 48% of firms that said so in January. Prior to the release of the meeting minutes, the euro-pound pair jumped about 90 pips to the 0.8920 level, but gave up those gains during the rest of the day. The pair hit a low below the 0.88 level around noon New York time. The euro fell against the dollar as well, continuing its decline this week following its break of support we highlighted yesterday at the 1.2720 level. It is under pressure on the news that Western European banks have high risk of exposure to Eastern European banks that are facing difficulty during this global economic crisis. In the US, housing starts fell to an annual rate of 470,000 units, a steep decline from December, a record low, and a figure that undershot expectations. It's the seventh straight month that home constructions fell, as high inventories and the recession are crimping builders' intentions. Building permits decreased to 520,000 units. Industrial production in January continued to fall, falling slightly more than Wall Street expectations. Output was down 1.8%, and the proportion of factories in use fell to 72%. The dollar-yen pair rose again today, despite fragile global equity markets. The greenback climbed 160 pips, testing the 94 level. Risk appetite was boosted in New York trading as President Obama pledged $275 billion to a program to help stem foreclosures and cut mortgage payments for as many as 9 million struggling homeowners. If this effort is successful in improving the housing market, it can help to bolster the U.S. economy. The yen retreated against its other main rivals as well today. Later, the Bank of Japan will decide on interest rates. Overnight, Switzerland posts two releases, its trade balance and its ZEW expectations, and the UK reveals its government borrowing. Tomorrow, the US will release data on jobless claims, producer prices, its Philadelphia Fed index, and the leading index. Canada also releases its measure of leading indicators. And that wraps up this edition of our broadcast. Thank you for joining us here at CMSFX.com, and happy trading.